What's up? Japan Market Samurai, broadcasting fresh updates straight from Japan. Let me ask you something. You're not seriously still betting on China, are you? Or worse, you're ignoring Japan while your competitors are already getting positioned. If so, you're not just behind, you're about to miss one of the biggest capital rotations in decades. Some think only hedge funds or insiders can catch these shifts, that spotting global money flows is about talent or instinct. But that's dead wrong. There's a method, a framework, and you can use it too, starting today.
Picture this. You're not reacting to headlines. You're anticipating them. You're positioned in the one market where capital is flowing before it becomes obvious. Low risk, real growth, institutional momentum. That's Japan in 2025. And yes, you can still get in early.
I get it. You're frustrated. Markets feel inflated. Everything looks risky or overbought. You don't know where to move next. And everyone's saying, just stick with US stocks. But let me ask, do you really believe nothing else in the world is investable? That's not logic, that's fear, and it's costing you. Maybe you've told yourself, I don't speak Japanese, too far, too complicated. But guess what? That's just resistance in disguise. Global capital doesn't care about your excuses. It's already rotating. Factories are breaking ground. Institutions are reallocating. And you're still doubting? I didn't get here with a trust fund or insider network. I studied the flows, watched the patterns, followed the proof. And now I'm laying it out for you, step by step. Because once you understand how capital really moves, you don't chase, you lead. But, I'll be honest, this strategy isn't for everyone. If you want hype or hot takes, this isn't your channel. But if you want a front row seat to where the next wave of money is going, and how to be early for once, then stick around. Because what I'm about to show you might not be available much longer. Let's dive in. Step 1. Capital follows stability. Japan is the last safe bet in Asia. Conclusion. Japan, Asia's last safe haven. Capital doesn't just go where returns are high. It flows where things are safe and predictable. Right now, Japan is the only country in Asia that offers both political stability, economic discipline, legal transparency, no currency chaos, no authoritarian surprises, no sudden rule changes. While much of Asia has grown riskier, Japan is standing out as the quiet favorite for global capital. And smart investors, they're already moving in. Reason why Asia's old favorites are fading. Let's be real, the traditional heavyweights in Asia are slipping. China, struggling with long-term structural issues, real estate collapse, low domestic demand, and tightening state control. Hong Kong, no longer neutral. New security laws have shaken investor confidence and eroded its role as an international hub. Singapore, still a wealth magnet, yes, but facing stricter anti-money laundering regulations after recent scandals. Access is slowing down. In this regional shuffle, Japan stands alone with a functioning democracy, a solid legal system, honored independent central bank, low geopolitical tension, clear consistent policy direction. That's a rare mix, and it's exactly what cautious capital craves. Example, the US-China split changed the map. Let's look at what's actually happening. In 2023, the US dropped the hammer, placing strict bans on outbound investments in Chinese high-tech sectors, AI, quantum, semiconductors, all off limits. That capital needs a new home, and it's not going to Beijing. Instead, it's being redirected toward more stable, trusted partners, like Japan. At the same time, Tokyo and Washington are building tighter alliances in tech, supply chains, and security. That's boosting Japan's geopolitical standing and its credibility in financial markets. Add in a weaker yen, and Japan starts looking like a high-value, low-risk entry point into Asia. Summary, the shift has started. Don't miss it. This isn't hype. This is strategic capital realignment. Institutional investors, sovereign funds, and global asset managers, they're not waiting. They're already positioning. Because when the world gets risky, capital doesn't chase flash. It looks for trust, order, and resilience. Right now, only Japan checks all the boxes in Asia. And if you're still watching from the sidelines, you're already late. Step 2. TSMC. Kumamoto is more than a factory. Conclusion. Capital builds in Japan. Japan isn't just a shelter from market chaos, it's a platform for building what's next. This is what separates Japan from other so-called safe havens. Places like Switzerland or Singapore attract wealth to protect it. But Japan, it attracts capital that wants to create. That's a major distinction, and it's why Japan is rising on global investors' radar. Capital isn't coming here to sit still. It's coming here to move into factories, infrastructure, innovation. And there's no better proof of that than the rise of TSMC, Kumamoto. Reason Japan matches new priorities. The game has changed. In today's geopolitical environment, investors and corporations alike are prioritizing reliability over speed and resilience over cost-cutting. Japan checks every box in that new framework. A trusted legal system, running transparent governance, no political unpredictability, top-tier engineering talent, physical infrastructure that works, low exposure to authoritarian risk. This is the formula global capital is looking for, and it's becoming harder to find elsewhere in Asia. China's instability and Singapore's regulatory tightening make Japan look not only safe, but functional and scalable. Japan isn't just a fallback, It's the new first choice for building long-term industrial and financial ecosystems. Example, TSMC leads the way. In 2020 TSMC officially launched its Kumamoto fabrication plant. This isn't a token presence, it's a major investment, backed by both TSMC and the Japanese government. A second plant is already underway, supported by over $5 billion in public funding. This move is strategic, not symbolic. TSMC is rerouting part of the global chip supply chain right into Japan. And they're not alone. Toyota is pouring capital into advanced EV chip production. Rapidus is pushing to develop 2nm tech with deep state industry cooperation. This isn't just capital inflow, it's a structural shift in where high-tech industries are rooted. The world's most advanced companies are building new hubs, and they're choosing Japan. Samuribi. Japan is back in the game. TSMC, Kumamoto is more than a factory, it's a signal. It tells us that Japan is no longer just a safe but stagnant player in Asia. It's becoming a core node in critical global industries, and capital is responding. The shift is already happening, not in headlines, but in concrete, physical investment, factories, talent, infrastructure, real work. When the biggest chip maker in the world bets on Japan, the message is clear. This is where the next decade is being built. And if you're watching this now, you're still early. Step 3. Japan's market reforms are real. Conclusion. Japan is becoming investable. For decades, Japan has been labeled a value trap. Cheap stocks, low growth, poor governance, great on paper, but dead money in practice. But that's changing, not in theory, in policy, in structure, in flow. Japan is transforming from a passive, slow-moving equity market into a more modern, investor-friendly one. This isn't about short-term hype. This is about deep reforms that are finally taking shape after years of talk. And it's creating a new kind of Japan, one where capital not only enters, but stays and compounds. Reason reforms are finally happening. The Tokyo Stock Exchange has launched one of the most aggressive governance overhauls in its history. Companies trading below a PBR of 1.0, meaning they're valued lower than their net assets, are now being pushed to explain why. They must publish capital efficiency improvement plans. This is no longer nice-to-have reporting. It's becoming an investor expectation, backed by the exchange itself. On top of that, the Japanese government made the new NISA system permanent. That means bigger tax-free investment accounts, no expiration dates, a long-term domestic demand engine built into the system. The result? A market that's finally aligning with shareholder interests and creating structural support for rising valuations. Example, the numbers are moving. Let's look at how this is playing out. Since the new PBR pressure began in 2023, hundreds of listed companies have started share buybacks, dividend increases, or restructuring efforts. Names like Toyota, Hitachi, and Nippon Steel are now treating capital allocation like Western firms do, with efficiency, not tradition. Meanwhile, foreign ownership of Japanese equities is climbing. Funds like Warren Buffett's Berkshire Hathaway have been scaling up their Japan positions, not for PR, but for returns. The new NISA system has also unlocked billions in household capital. Retail investors, once passive savers, are now becoming active participants in Japan's equity story. This isn't just anecdotal. The money is showing up, and it's staying. Somjera, Japan is no longer a value trap. Japan's reforms aren't superficial. They're changing how companies operate, how investors behave, and how capital flows are sustained. The market is no longer cheap because it's broken. It's cheap because it's early in the revaluation cycle. For years, investors said, if Japan just fixed governance and boosted demand, we'd be in. Well, Japan did, and now capital is flowing in to catch up. If you want to ride this shift, don't wait for the headlines. By the time the world notices, it's already priced in. Step 4. The capital shift has begun. Conclusion. Capital is already moving. This isn't a theory. This isn't a prediction. It's already happening. Capital is flowing into Japan, not in whispers, but in size. And if you're only watching economic headlines or waiting for mainstream media to confirm it, you're going to miss the early innings of one of the biggest reallocations in Asian market history. The signals are clear. The capital is here. The only question is, are you positioned yet? Reason. Momentum is building. Let's talk fundamentals. Since early 2024, foreign investors have returned to Japan in waves, not just in portfolio flows, but also in physical investment and infrastructure. Why now? Because Japan offers the rare combination of stable currency, strong corporate profits, supply chain re-onshoring, long-term household demand via new NISA. It's not one single trigger, it's multiple macro and micro catalysts converging at the same time. Meanwhile, India, though promising, still lacks the infrastructure depth and policy consistency that capital demands for large-scale deployment today. Exemplaris, the Nikkei and beyond. The Nikkei crossing 50,000 wasn't a fluke. It was a signal, a result of real capital rotation. Foreign buying has dominated multiple consecutive weeks. Trading volumes are up, dividend payouts are rising, share buybacks are increasing, private equity deals are resurfacing. This isn't a market running on hype. It's being underwritten by capital discipline and structural tailwinds. At the same time, the yen remains relatively weak, adding another tailwind to equity exposure for dollar-based investors. It's not a spike, it's a build-up, and it's far from finished. Somuri, early movers have the edge. When capital starts to flow, it doesn't announce itself with headlines. It shows up in prices, policies, and positioning. Japan is now where capital goes when it's serious, not speculative. It's not about catching a trend. It's about recognizing a paradigm shift in how Asia will be capitalized for the next decade. The best part? Most investors haven't caught on yet. That's your edge, and it won't last forever. This is your edge. If you stayed with me until now, you're already part of the top 10%. Because most people, they click, they skim, they leave. They chase trends, wait for headlines, and never build a real conviction. But you're different. You're not watching for entertainment. You're watching because you want clarity, strategy, and a serious edge in a world that's only getting noisier. That alone already puts you in a league of your own. And you should be proud of that. Because those who succeed long-term in investing aren't the loudest. They're the ones who spot quiet shifts before they become obvious. Take the next step. If this video gave you a new lens on what's really happening beneath the headlines, hit that like button to help more people break out of the noise. Got thoughts, doubts, or a specific industry in Japan you want explored? Leave a comment below. We don't ignore them. Some of our deepest videos came straight from your ideas. And if you haven't already, subscribe to the channel right now. This isn't just another financial channel. This is where data meets global capital flow analysis, directly from Japan's market front lines. If you want in early, this is where you start. Because the best investment you can make isn't just in stocks, it's in your perspective. What you now know. Let's quickly go over the core takeaways. Japan is more than safe. It's functional, scalable, and quietly becoming Asia's new capital anchor. The TSMC Kumamoto project and other real-world investments signal a supply chain shift in motion. Rongo, reforms in Japan's equity markets, PBR pressure, new NISA are rewriting the rules from within. Rongo, foreign capital isn't waiting for confirmation, it's already flowing in and locking into position. This is not speculation. It's not about timing the next spike, it's about positioning for the next decade. And now, you know what most investors don't. Be early or be replaced. We are at the start of a rare macro rebalancing. And moments like this, they don't stay hidden for long. Soon, the mainstream will catch on. The media will start talking. Capital will accelerate. Valuations will climb. And by then, the edge is gone. But you're here now. You're early. Don't waste that. This is Japan Market Samurai. Thanks for watching. Stay sharp, stay informed, and I'll see you in the next video.